Hello everyone, this is Alec, Karanikolas, and today I'm going to be explaining to you why LFIN, Longfin corporations, could be the biggest scam currently on the market today. So what LFIN does, as you can see from their homepage, is they do multiple things. They focus on AI and computer learning, and what made this company so popular is their blockchain technology. Essentially, how they're implementing the blockchain into their company. So I will explain 3 reasons why this company is extremely overvalued and could be a very massive scam or just a flaw in the market. So my 3 reasons are their low revenue and their low growth, how they have very, very few employees, and they actually just hired their first accountant a few days ago, so all of their SEC filings are actually unaudited, and how this incredible rise in their market share could mostly be due to the blockchain frenzy that has been upon us in the later half of 2017 and even today still, even though the prices of many cryptocurrencies are in a small bear market at the moment. So what I want to highlight to you guys is this article written by Eric Winning in the Zen Strategist, where he essentially describes in a very similar manner why LFIN could be the short of the century in his opinion. And he doesn't even want to call them a company, as he says. So on their IPO on December 13th, they issued their stock at a price of $5. This dramatically increased, as you can see, on the 18th, just a few days later, their stock price hit $142. That is just absolutely absurd and almost unheard of for an IPO to reach these heights. On this day, there were multiple halts of the stock, and it was just fascinating to watch how it would jump $10 in essentially a second once the stock was trading, and there would be long halts of 10 minutes to a longer amount of time where this would not trade just due to the large discrepancies between the bid and the ask. If you just look at their range on that day, it's just absolutely incredible how the company could essentially triple in one day, which is absolutely absurd. The only time where a company should be able to triple in a day is essentially in my opinion, a pharmaceutical company if they develop a incredible drug or cure for cancer, essentially. The only reason why a company should double. So as you can see, it reached its peak at 142 and it gradually dropped, came up again, dropped for a prolonged period of time, came up again, dropped for a prolonged period of time, came up again, and you can see this pattern continuing. And in the past week or so, week and a half, it's gone on this upwards trend again, which, as you can see, have happened quite a few more times, so it might just be a bull trap, which is what I believe it is based off of my hypotheses, and that I believe this will eventually come below 5 as people give up their blockchain frenzy. So as we'll go back to the website, and we will see their investor relations page, and we will look at their board of directors. You can see there's just a few people, and most of these people, like Venkat, is the chairman and CEO, and he's also on the board, director, and CFO. So they're internal people who are primarily on their board of directors. Now, if we go and look at their financial results, this is the numbers that they had last year. We can see that they only brought in $28 million in revenue. That is absolutely absurd for a company to have this market cap for such a low revenue and with such small growth and profit. The profit is not as big of an issue as just the overall revenue. As we know, there are many companies that post a negative profit but are still worth billions of dollars, such as Netflix and Amazon and Uber and Lyft, which are not public companies, but they are worth a lot of money. And as we can see, in 2016-17, they actually had a greater revenue and a greater profit, so they are in a downward trend. And this is very similar to Kodak and Long Island iced tea. as they were both in a downwards trend, as seen by their chart of Kodak right here. Just give it a second. They were on a downward trend for a while. Let me bring a 2-year chart up to show you. As you can see, they were in a very large downward trend. Their stock was around $10 in June of 2017, and it was just going down and down and down. And right during kind of the peak of the blockchain frenzy and the Bitcoin frenzy, they released their Kodak coin, and as you can see, they tripled in one day. So the day after this happened, I was looking at it and just thought that this was absolutely ludicrous, how a company can not really do anything magnificent and triple in value in one day. So I decided to take advantage of this and have short exposure to this instrument in a defined risk way. And I did this by selling a medium length, I would say. It was about 30 to 35 days was the call spread that I sold, and I sold the 10/12.5 call spread, and I also sold the 12.5/15, which was for a shorter date. That was for 20 days or so, and both of those expired in the money by a great amount. As you can see, it shortly just tanked after a few weeks of this elevated level, and this is exactly what I believe will happen to LFIN, but perhaps at a larger extent, since Kodak has been a company for a while. And as you can see, according to Wikipedia, they have over 6,000 employees. They've been around for a very long time. They have a much greater revenue than Longfin, so they have something to fall back on, whereas LFIN does not have anything really to fall back on. It's pretty much a pretty shady company, in my opinion. So if you guys believe that this is also a very overvalued company, then there are a few ways of going about it. You can directly short the stock, but this has been done many times. Having undefined risk could be very dangerous, as your account could blow up. So that's why I prefer to have defined risk. And as you can see, there is a very large short interest, but unfortunately a lot of times these people are stopped out and forced to cover at an earlier date and price than they would obviously like. And additionally, the cost to short these shares, the borrowing cost, is absolutely absurd. It's 125%. So I would not recommend directly shorting the shares. So what I did, and I know a few other people have done, is they looked at the spreads. So you can either short a call spread or buy a put spread if you come up to the decision to have short exposure to LFIN to your portfolio. Of course, this is fairly speculative, so it should not be done for a large percentage of your portfolio. But if you like money and like risks as I do, then I would recommend adding some short exposure of this company to your portfolio. And I am not a licensed financial representative. I am not giving anyone any financial advice. If you want to make your own decisions, that is up to you. But I am not responsible for what happens. But I encourage you to do all of your own research and continuously learn every day. And I will post the links to Mr. Winig's article, as well as the other information I use, such as from Market Chameleon, where I saw the option chain for LFIN, as well as the implied volatility, which you can see on this site, which is a very useful information because when implied volatility is high, it is usually a profitable idea to sell some calls or sell some puts to take advantage of that heightened volatility. So thank you very much for listening to this video, and I wish you all success in the future. Have a good day.